Hi everyone, today we'll be going over accounts, May-June 2021, paper 3-2, question number 3. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 3 is part of section A, which deals with financial accounting. Now, without any further delay, let's get started. Dan normally sells motors in country A. During the year ended 31st March 2021, he also made sales on a consignment basis in country B. Tan sent 400 motors to Nadim in country B. So here Tan is the consigner and Nadim will be the consignee. Alright. So Tan sent 400 motors to Nadim in country B on a consignment basis during the year ended 31st March 2021, and the cost of each motor is 500. The normal selling price of each motor is 700, but Tan asked Nadim to sell 650 each. And we're also given the following information. Nadim is allowed a commission of 8% of the net sales revenue. So whatever sales Nadim will make, he will get 8% of the sales value as his commission. Then Tan received 5,000 deposit from Nadim before the goods were sent. And we are also given the expenses incurred by Tan. He paid for freight, insurance, and packing, whereas expenses incurred by Nadim paid for import duties, storage, transportation from port to warehouse, transportation from warehouse to customers, and the selling expenses. Okay, Nadim sold 300 motors. So Nadim was given 400 motors, and out of which he sold 300 at 650 each, and other 60 were sold with a trade discount of 5%. Okay, let's figure out the selling price of another 60 units. So if our normal selling price was 650 and we applied the discount of 5%, it just means that we only received 95% of this value as our sales revenue, right? So let's figure out the selling price for these 60 units. That's just going to be 650 times 95%, which we can write down as 0.95. So this gives the selling price for 60 units to be 570. Okay, out of the motors sold, 2 motors were returned, and the 2 returned motors were replaced by 2 new motors which had been delivered to the customers. So this just means that the sales return were actually replaced by making sales of the returned number of units. So we can see that 2 motors were returned, right? And we're also told that the 2 returned motors were replaced by 2 new motors which had been delivered to the customers. So we can just say that in total, we had sold 300 motors at 650 and 60 motors at 570. So we do not actually need to change anything because whatever goods were returned, we already replaced those returned goods by making another sales. Now, the 2 returned motors remained unsold at 31st March 2021 and each had a net realizable value of 450. So for these 2 motors, it remained unsold, right? So these returned motors will act as our inventory and it has a net realizable value of 450. So we need to include this in our inventory valuation. Now, for the first part of this question, we need to explain 2 disadvantages to a consigner in making sales on a consignment basis. So in this case, our consigner is Tan. So what would be his disadvantage? So the very first one would be increased risk, right? Because he needs to sell his goods in another country B. And while doing so, the inventory may not be safeguarded, which could result in a loss of value. So that's a major disadvantage to a consigner. Let's write it down. So the first one is increased risk because inventory may not be safeguarded, which will result in a loss of value. Okay, then the second disadvantage could be additional cost incurred, right? Because the consigner will have to pay for freight charges as well as commission to the consignee, and that could definitely reduce the profit as well. Let's write it down. Additional costs incurred due to freight charges and commission which will reduce profit. Okay, this concludes the first part of this question. Now we can move towards the second one. We now need to prepare the consignment account in the books of TAN for the year ended 31st March 2021. So since we are preparing the consignment account in the books of TAN, we need to write down the heading TAN and the consignment account. Okay, so I'm just going to create a line in between. Okay. So the thing to remember is that in the consignment account in the books of consignor, the only items placed in the credit side are going to be the sales made by the consignee and the inventory held by the consignee at the end of the period. So in this case, we know that our consignee is Nadeem. So the credit side will include the sales made by Nadeem and our closing inventory. And closing inventory is always written as balance CD in the consignment account. Okay, now all of the remaining expenses will be recorded on our debit side. So let's have a look above and figure out the total sales value. We are given information regarding it right here. So we know that 300 motors were sold at 650. So our revenue is going to be 300 times 650. And we also know that another 60 were sold at the value of 570. So that's going to be plus 60 times 570, which results in the total revenue to have the value of 232,050. Let's write this value in our consignment account. Okay, so that's 232,050. Now we can move towards recording all of the costs, and then we can figure out our inventory. Let's have a look above. So the very first cost would be the cost of goods sent on consignment, right? And we know that TAN sent 400 motors and the cost for each motor is 500. So the cost of goods sent is just going to be 400 times the cost per unit, which is 500. And this gives the total cost to have the value of 200,000. Let's record this as our first expense incurred on the debit side of the consignment account. And this is the value for goods sent on consignment, which has a value of 200,000. Now we can move towards listing all of the expenses incurred by the consignor as well as consignee. And here we can see that expenses incurred by TAN is freight charges, insurance, and packing. And we know that TAN in this case is a consignor, right? And we are preparing the consignment account in the books of consignor. So whatever expenses paid by the consignor will be recorded as the expenses which are being paid from bank. So we will record freight, insurance, and packing with the heading bank, and the amounts are 4,600 for freight, 1,200 for insurance, and 600 for packing. Let's record these three expenses on the debit side of our consignment account. So we will be writing it down as expenses that has been paid by bank, since we are preparing the consignment account in the books of consignor. So first charge was freight charge with the value of 4,600. Then we have second payment made by consignor of insurance, and this amounted to 1,200. And we have our final one, that was packing, and this amounted to 600. Now we will move towards listing the payments or the expenses incurred by the consignee. Let's have a look above. We can see that the expenses incurred by Nadeem are import duty of 1,800, storage charge of 2,700, transportation from port to warehouse of 2,200, transportation from warehouse to customers of 2,600, and selling expenses of 4,400. And since this is the expenses paid or incurred by our consignee, we need to record this under the consignee's name. So let's record these 5 expenses on the debit side of our consignment account. And since this is paid by the consignee, we need to record it under his name. So that's Nadeem. And the first expense incurred by him was import duty. which had the value of 1800. Now secondly, we again have Nadeem, who paid for storage, which amounted to 2700. And then we have Nadeem, who paid for transportation. So first transportation cost was from port to the warehouse, right? And it amounted to 2200. And there was another transportation cost. And the second transportation cost is from the warehouse to the customers. And this amounted to 2600. And he also paid for selling expenses. And selling expenses amounted to 4400. Okay. Now the next thing that we need to record in our consignment would be the commission paid to Nadeem. And that is always to be recorded on the debit side. So the commission paid to consignee should always be on the debit side. And this is again paid to Nadeem, which is commission. Okay, we were given additional information regarding the rate of commission. Let's have a look above. Right here, we are told that Nadeem is allowed a commission of 8% of net sales revenue. And we already figured out the net sales revenue right here, which is 232,050. So we just need to figure out 8% of this value as commission. So for commission, that is just going to be the value of net sales revenue, which is 232,050. And we need to multiply by 8% since that is the rate. So that's 0.08. And this gives the commission paid to Nadeem to have the value of 18,564. Let's record this in our consignment account. So commission was 18,564. Okay, now we need to figure out our closing inventory balance. So whenever we are trying to figure out the value or the cost of the closing inventory, we first need to add all of the costs incurred during this whole consignment process. And then we need to divide by the number of total units sent on consignment and then multiply it with the remaining number of units that we have, which will act as the inventory, right? So let's figure out the total cost. Okay, I'm just going to write it right here. So the very first cost is the cost of goods sent, right? Which we already figured out to be 200,000. Then the second cost would be the expenses incurred by TAN. This is the freight charges, right? So this should obviously be included in the value for inventory. Insurance should also be included, and packing should also be included because these are the costs incurred while sending the goods to Nadeem in country B, right? So we need to add these 4 expenses as well. So that's 4,600 for freight, 1,200 for insurance, and 600 for packing. Okay, then we can move towards expenses incurred by Nadeem. So the first one is import duty, which obviously needs to be paid so that the goods can be imported from country A to country B, right? So this 1,800 should be included. I'm just going to add the 1,800. And the second one is storage cost. Okay, so this is a bit tricky one because whenever we're trying to value inventory, storage cost can be excluded or it can be included as well. So there is no right and wrong while including or not including storage. But in my case, I think that goods are stored when they are not yet sold, right? So I think this should be included while calculating the valuation for inventory. So I'm just going to add the storage cost of 2,700 as well. So that's plus 2,700. But if you feel like it, you can exclude this storage cost and figure out the inventory valuation as well. Okay, the third one is transportation from port to warehouse. So from port is where we imported the goods and warehouse is where we are storing the goods, right? So this value should also be included while valuing the inventory. So I'm just going to add the transportation cost of 2,200. And then the fourth one is transportation from warehouse to customers. And this transportation is required when we are selling the goods to the customers, right? But we are calculating the value for inventory, which means that selling expenses should not be included. So we do not need to include this. And the fifth one is again selling expenses. So this should not be included while valuing inventory. Now we can figure out the total cost. That's 200,000 plus 4,600 plus 1,200 plus 600 plus 1,800 plus 2,700 plus 2,200. And this gives the total cost of goods to be 213,100. Okay, so this is the total cost corresponding to 400 units, right? Now we can easily figure out the cost per unit. So cost per unit is just going to be total cost divided by total number of units, which in this case is 213,100 divided by 400, which gives the cost per unit to have the value of 532.75. So this is the cost of each inventory. All right, and we know that Tan sent total of 400 units, right? Out of which 300 were sold. So these are sold goods, and 60 were sold as well. So that's plus 60. So out of 400, 360 units were sold. So the remaining unit is going to act as our inventory, right? So remaining is just going to be 400 minus 360, which results in 40 units to act as our inventory. But out of these 40 units, we know that 2 were returned, right? And those 2 have the net realizable value of 450. So whenever we are talking about total value of inventory, if the net realizable value is less than the cost per unit, then inventory will include the net realizable value instead of the cost per unit, right? So out of these 40 units, 2 units is going to have the value of 450, right? So that's 2 times 450. And the remaining 38 units is going to have the value that we just figured out, which was the cost per unit. So that's 532.75. So I'm just going to multiply it. 532.75. Okay, now the inventory value for the 2 units is 2 times 450, which is 900. And for the remaining 38 units, that's going to be 38 times 532.75, which results in 20,244.5. So I'm just going to round it off. That's going to be 20,245. So the total inventory valuation now is going to be 900 for 2 units plus 20,245 for 38 units. And this gives the total inventory value to be 21,145. Let's include this in our consignment account. So inventory is recorded under the heading of balance CD, and this has a value of 21,145. Okay, now the only thing remaining to do is figure out whether there was a profit on consignment or loss on consignment. And in order to figure it out, we first need to figure out the balance on the heavier side, right? So we need to figure out the total for both debit as well as credit side. Let's start it from credit side. That's going to be the sum of these two values, which is 232,050 plus 21,145, which results in the total to be 253,195. Now we can move towards figuring out the total for the debit side, and that will be the sum of all these values. So all of these values, we need to add it up. That's 200,000 plus 4,600 plus 1,200 plus 600 plus 1,800 plus 2,700 plus 2,200 plus 2,600 plus 4,400 plus 18,564, which gives the total to have the value of 238,664. Alright, so we can clearly see that our credit side is the heavier side in this case, which means that the balancing figure should be on the debit side. And if the balancing figure is on the debit side, it actually represents the profit on consignment. Let's write it down. So we have profit on consignment. And since this acts as the balancing figure, in order to figure it out, we need to figure out the total first. And the total is just going to be the total of heavier side, which is the credit side. So that's going to be 253,195. Let's write it down. So that's 253,195, and the same for debit as well. Now, whenever we are trying to figure out the balancing figure, we just need to subtract all of these values from the total. And we already figured out the total of these values, right, which amounted to 238,664. So we just need to subtract this value from our total, which in this case is 253,195 minus 238,664, which results in the profit from consignment to have the value of 14,531. Let's write it down. So that's 14,531. And this concludes the second part of this question. Now we can move towards the third one. Okay, so we were given workings section right here. So instead of scribbling all over the question paper like I did, you guys need to be showing all of your workings in this particular box. Now for the third part of this question, we need to explain 3 reasons why Tan sells motors at a lower selling price for the consignment sales. Let's have a look above. In the question, we were told that the normal selling price of each motor is 700, but Tan asked Nadine to sell at 650 each. So if you're talking about country A, then Tan will sell those motors at the selling price of 700, but in country B, he's selling those at the price of 650. And we need to figure out the reasons for this. So the very first reason might be pricing strategy, right? Because he is selling the motors in country B for the first time, and if he sells it at a lower price, then he might build market share and build his own customer base. Let's write it down. So the first reason is pricing strategy. In order to build market share in country B. And the second reason would be that he chose that price by comparing the competitors' price in country B, right? Because we need to have a benchmark value with that of the competitors. Let's write it down. Competition in country B. And this is the case for benchmarking. With the price of competitors. And the third one might be the income level in country B, because if the income is quite low as compared to country A, then the customers in country B will only buy the cheaper motor. That's why he could set the selling price below his normal selling price. Let's write the third reason down as well. Income level in country B. Maybe the customers will only buy the cheaper motor. Alright, this concludes the third part of this question. We can now move towards the fourth one. We are given additional information. Tan finds that his products are well received in country B, and he plans to set up a company in country B to sell his products. And for the fourth question, we need to advise Tan whether or not he should set up a company in country B to sell his products. We need to justify our answer. So the very first one is that if he set up the company without the help of any consignment, then he can fully control the selling activities, right? So Tan can fully control the selling activities. And the second thing is that since he can have his own company, he no longer needs to pay any commission to consignee. Let's write it down. He can avoid paying commission Okay, but since he is setting up a company, he will have to incur setup costs, which can be of large amount. So he will incur setting costs. And he has only been selling his products in country B for a year through the consignment with Nadeem, right? So we can say that he is new to the market and does not have sufficient knowledge of the market, which could backfire if he were to set up a company and the products were not to be well received by the customers. So he is new to the market and does not have sufficient knowledge of the market. Now, based on these factors, we need to advise Stan whether or not he should set up a company in country B. So, like I said, he is new to this market, and if the products is not to be well received, then he would have to incur a lot of setting costs and no profit, right? But in case of consignment, we figured out that there was a profit above, right? So the profit on consignment amounted to 14,531, which is in my opinion, a good amount. So instead of setting up a company so early, he could continue with consignment for a few more years and then set up his own company. So my opinion would be to advise him not to set up a company in country B. Let's write down the decision clearly. So Tan should not set up a company in country B. Okay, this concludes the fourth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.